Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. We're now here in our afternoon session. We were live earlier today discussing self-directed contribution options. Now we're back here for our afternoon session. We want to talk about how there's still time to open up a solo 401k for 2024 for certain, depending on your type of business and depending on the type of contribution that you want to make. So if you're on YouTube, if you could please subscribe and hit the notifications button, then you'll be able to come to these live sessions and you can ask your own questions live here during the session. So we also host lots of great content throughout the week. We usually have deep dive sessions on Fridays. So there's a lot of other good reasons to subscribe that you'll get notifications of all the content. We would also encourage you to come to our community. It's totally free to join. All are welcome. You can see that we have an active forums on there. We've got over 30,000 members that are all solopreneurs, self-employed individuals, or advisors, other experts. So it's totally free to join. It's a great way to just learn and to ask questions, see what other folks are asking. So please don't hesitate to join. So again, today's session, we want to answer the question, can I still open a solo 401k for 2024? So the answer is yes. Now, but it also depends, right? Depends on how your business is taxed, what type of contribution you're looking to make. So we want to dig into it some more. But at a high level, there is still time. Now, of course, this presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Again, we'd encourage you to subscribe to the channel, hit the notifications bell, then you can join us here live, ask questions. So if you're here on YouTube, please don't hesitate to ask questions. Or if you're on any of the other channels like LinkedIn or Twitter, or if you went right to our webinar page, if you go to our webinar page, mysolo401k.net/webinar, you can find the links. And if you submit your email, then you'll get an email afterwards where you can hear the recording. So please send questions or topics to discuss. Yeah, if you could please, thank you so much for joining. If you could also please if you're on YouTube, that'll help get the word out or share with folks that might be interested in this content. We'd really appreciate that. So not only do you get access to the daily live Q&As where you can come and ask questions, but you'll also get notified for the deep dive content that we host. For example, we're in the middle of contribution season. We just finished up going through a number of different A to Z seminars regarding how to make contributions, how to report contributions, how much you can contribute, like contributions A to Z. And we broke it down by different business types, whether or not your business is taxed, for example, as a sole proprietor versus an S corp or a C corp, or even a partnership. The next series of webinars we're going to be hosting is going to be strategy sessions around how much income one would need to be able to maximize contributions. So we think of that as the magic number, right? If I want to be able to make the maximum amount of Roth and mega backdoor Roth contributions to my solo 401k plan, how much self-employment income do I need to report? So we're going to run those calculations and share that information and, answer questions, go through different scenarios, because there's different objectives, right? Some people want to maximize pre-tax, whereas others want to maximize Roth. And then we're also going to have a series of deep dive webinars focused around mega backdoor Roth. Again, we like to do things A to Z. So just really analyze it from all angles. So if you subscribe, you get the notifications, you can come live and ask questions. Now, it's always good to start with the basics, right? So solo 401k eligibility, right? A solo 401k is a 401k plan that's for a self-employed individual. So what they call an owner-only plan. So in order to be eligible, you need to be self-employed and have no full-time W-2 employees. So you could think like an independent contractor or a self-employed attorney or a self-employed realtor. So it's not somebody that has a W-2 job somewhere else. These are self-employed individuals. That's the first factor. That's the first prong of eligibility. The second factor that needs to be met is not having any full-time W-2 employees. Now, you could have a spouse, you could have another business owner, but you can't have any non-owner, non-spouse full-time W-2 employees. You could have contractors. If you have independent contractors, that's not going to prevent someone from setting up a solo 401k. So let's dig a little deeper as far as eligibility and some of the top eligibility considerations. Do I need a separate entity? The answer is no. We have many individuals who operate as sole proprietors. They don't have a formal legal entity like a LLC or an S corp, and that's fine. As long as you're reporting earned self-employment income in your taxes, that'll be sufficient. Now, what earned self-employment income means depends on how your self-employed business is taxed. So for a self-employed person who is self-employed as a sole proprietor, earned self-employment income is going to be income reported on Schedule C of your taxes. Whereas if your business is taxed as an S corp or a C corp, it's going to be W-2 wages. And then if your business is taxed as a partnership, it's going to be earned income reported on line 14 of the K-1 that you receive from the partnership. Now, there's no minimum amount of earned self-employment income that you would need to be eligible to set up a plan. But of course, if your goal is to make contributions, you can't save more than you earn. So if you have a small amount of earned self-employment income, relatively speaking, you would be eligible to set up a plan. You could roll over funds. For example, you could invest in alternative investments, but you may not be able to contribute very much because, again, you can't save more than you earn. Your spouse or business partner, they could also participate in the same solo 401k plan as long as they are also working in the business and reporting their own earned self-employment income. So in that case, it would be one plan, one fee, different accounts for the different participants. It's possible to set up a solo 401k even if somebody has a day job, right? They might have a W-2 job and then also have a side business. As long as they're reporting that earned self-employment income from their side business and have no W-2 employees working for any business that they own or that's even owned by their spouse, no full-time W-2 employees. And that would also be true even if that same person participated in their day job 401k plan. So you can have both a 401k plan through your day job, and if you're eligible to set up a solo 401k, have a solo 401k for your self-employed business. So that takes us to the question, whether it's still possible to open up a solo 401k for 2024. So another way to phrase that is, what are the deadlines? Well, as I mentioned, that it depends on how your business is taxed. It depends on the type of contribution that you're looking to make. So for somebody whose self-employed business is taxed as a sole proprietor, in other words, they report their self-employment income on Schedule C of their 1040. Could be a single member LLC, where it's a disregarded entity, where that income is still reported on Schedule C of 1040, so the LLC is disregarded. Or it could be somebody that doesn't have a formal legal entity, right? They might just operate under their Social Security number. They might receive a 1099 NEC, and again, file the self-employment income on Schedule C of their 1040. For somebody whose business is taxed as a sole proprietor, there's still time to set up a solo 401k and make all types of contributions for 2024. They could make employee, both the pre-tax and Roth, because our plan allows for both pre-tax and Roth. They can make employer. They can make voluntary after-tax, which is how one makes mega backdoor Roth contributions. So that person whose self-employed business is taxed as a sole proprietorship, they could still set up a solo 401k and make all types of contributions for 2024, right? If they set up the plan in time to make those contributions by April 15th. Now, if they don't set up the plan and take and in time to make the contributions by April 15th of 2025, let's say they set it up in the summertime, as long as they filed a timely extension for their self-employed business tax return, which is their 1040, right? Since they're a sole proprietorship, then they could, even after April 15th, set up a solo 401k plan and make employer or voluntary after-tax contributions by October 15th. In other words, the extended deadline for their 1040. Now, if somebody signed up by the end of last year, by December 31st of last year, then they would have met the deadline for 2024 already. They've got time to make all types of contributions, employee, employer, or after tax, either by April 15th or October 15th if they file a timely extension. So setting up the plan by the end of the year gives the individual the option to make the most contribution types, in other words, all contribution types with the most time, right? Even in making employee contributions by the extended deadline. But if you hadn't yet set up the plan, you could still set one up and make all types, but you'd have to make those employee contributions by April 15th if your business is taxed as a sole proprietorship. Now, for somebody who had a solo 401k plan already, or who has a solo 401k plan somewhere else, like let's say they have a basic solo 401k plan at a discount brokerage like Fidelity or Schwab, and they established that plan before the end of last year, then they would have met the deadline, and then they could upgrade their plan to our plan here, and they'd still be able to make all types of contributions by either April 15th or October 15th, because in that scenario, they already had the plan, and now they're just upgrading their plan to our plan. So they've already met the deadline. Now they're upgrading it to our plan, which allows for all different types. So they could still make all different types for 2024 by April 15th or October 15th. So now let's look at a different business type, a partnership. So the rules are different for a partnership. So if someone didn't have a solo 401k plan, that they didn't sign up with us by the end of last year, or they didn't already have a solo 401k plan like at a discount brokerage like Fidelity or Schwab, and now they're just setting up a solo 401k plan here in 2025, it's too late to make employee contributions. You could only make employee contributions for 2024 if the business is taxed as a sole proprietorship and the plan is set up in time to make those employee contributions by April 15th. But for other types of businesses, as you will see as we go through the slides, if the plan wasn't set up with us, or the person didn't already have a solo 401k plan somewhere else that they're upgrading to our plan by the end of last year, it's too late to make employee contributions for 2024. But it's not too late to make employer or voluntary after tax, in other words, mega backdoor Roth contributions for 2024, as long as they set up the plan in time to make those contributions by their business tax return deadline, including extension in 2025. So for a partnership, they would have to set it up and make the contributions either by March 17th or September 15th if they file a timely extension for that 1065. And you'll see the pattern here. Same thing if the business is taxed as an S corp. If they didn't sign up with us or have a solo 401k plan with somebody else, like at a discount brokerage, that they want to upgrade to our plan by the end of last year, by December 31st, then it's too late for those businesses taxed as an S corp to make employee contributions for 2024. But there's still time to open up a solo 401k and make employer or after-tax contributions, as long as they set it up in time to make those contributions by the business tax return deadline, so March 17th or September 15th, if they file a timely extension for that 1120S. And then finally, we can see, again, same pattern if the business is taxed as a C corp, right? Could be a corporation taxed as a C corp or an LLC taxed as a C corp. They didn't set up the plan by December 31st, so they didn't sign up with us or have it set up somewhere else that they want to upgrade to us. If they hadn't done that by the end of last year, it's too late to make employee contributions for 2024, but there's still time to set up a plan and make employer or voluntary after-tax contributions for 2024, as long as the plan is set up and those contributions are made by the 11/20 deadline. In other words, April 15th or October 15th if they file a timely extension for that C Corp tax return. All right, wonderful. So thanks so much for the participation. So now I want to go through the questions. I want to spend some time going through the questions that are being chatted up. Thank you for bringing the questions. And again, please subscribe to the channel, hit the notifications bell so you can come and ask questions like those folks are doing now. So first question, thank you so much for bringing the question. I'm self-employed in an LLC S Corp. What are some benefits of using your service as opposed to directly setting up my solo 401k with a brokerage firm, besides your help with the Mega Backdoor Roth? Well, the Mega Backdoor Roth is a huge one, right? Because the individuals can really contribute, for example, 10x times roughly the amount that can be contributed to a Roth IRA, as long as they have the self-employment income to justify it. So that's a big one, as you noted. Another big motivation would be the tax credit. So setting up our solo 401k plan, unlike setting up a solo 401k plan at a discount brokerage, setting up our plan will automatically make the self-employed business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. And that's tax credits, not tax deductions. So that means it's going to reduce the individual's tax liability dollar for dollar by the value of the credit. That means that it's going to more than cover our fees for the first 7 years. So it makes our plan effectively free for more than the first 7 years. And then going forward, we only charge $125 a year. Other features that would prompt someone would be the ability to take a 401k loan. So with our plan, our participants can take a solo 401k loan. That's where they can use the funds for any purpose whatsoever. It could be an emergency purpose or a non-emergency purpose. It's not going to be subject to taxes or penalties as long as it's properly documented as a loan, which we handle the loan documentation requirements as part of our service for no additional charge, and paid back according to those loan terms. It's got to be paid back in either monthly or quarterly payments, equal payments of principal and interest. The interest rate is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. Another feature that's super popular with our customers is the ability to self-direct their funds, including investing in alternative investments like real estate, crypto, precious metals, private placements, but also still, of course, having the ability to invest in typical brokerage type investments like ETFs, mutual funds, stocks, bonds, etc. So in other words, investing in what they know. A lot of our customers being self-employed, right? They may be more comfortable investing in real estate or precious metals or crypto, or at least want to diversify or have the option to diversify into those types of investments. And then finally, I would say the compliance support. So once the value of the plan, for example, exceeds $250,000, there's going to be an informational tax filing requirement, which is called Form 5500EZ. So those brokerage firms, those discount brokerage firms, they're not going to handle that 5500EZ. Based on experience and client feedback, they may not even do a good job of notifying the customer, because we have customers who start out with a discount plan at a discount brokerage, then they upgrade to our plan. And as in the course of doing that, they find out that their value of their plan exceeds $250,000. And they find out that that meant that they had to have been filing the 5500EZ, and now they got to file it under the late filing program. So we handle that as an optional free service for our customers. In other words, no additional charge. And we do that under the electronic filing system just to make it easy for the customer. So those are some of the top reasons I would say, but that's a great question. Thank you so much. I'm trying to determine two things first. If we have a multi-member LLC in Idaho, split 95% and 5%, and the two members are husband and wife, is this split used by the IRS to determine percentage ownership? Second, if the employees open a solo 401k, meaning the husband and wife, and the 5% owner contributes and or rolls over other 401ks into the solo 401k, can that person defer their RMDs once they reach the age of 73 since they have a 401k and own 5% or less in the company? So great question. It's super common that we have customers where it's a husband and wife. They're both participating in the solo 401k. And that's totally fine as long as each spouse is working in the business and reporting their own earned self-employment income. So as a matter of fact, there's no requirement for the spouse to even be an official owner of the company. It's really just the requirement that the other spouse is working in the business and reporting their own earned self-employment income, such as their own Schedule C or their own W-2, etc. Second, so really the ownership is not relevant to eligibility. What's relevant is working in the business and reporting earned self-employment income. Second, as far as the 5% rule for required minimum distributions, the answer is no, because in applying that 5% rule, of course, they're going to look at other related persons and attribute the ownership of the related persons to that person, such as a spouse. So they're going to analyze it as if that spouse owns 100% or more of the, or I shouldn't say or more, owns 100% of the company, because that person's spouse's ownership is going to be attributed to them for purposes of applying that rule. Great questions. Thanks so much for the good questions. So we'll just spend another few minutes, give you a chance to ask questions. We'll just go through some of the top benefits of the plan. I would say number one is fast account setup and funding. So we prepare the documents to create the solo 401k within the same day. And then we're totally neutral as far as where the accounts are at. So we've helped customers open up accounts at hundreds of different banks, many different brokerages. Of course, we don't have access to the money. We don't have access to the accounts, but we're very hands-on in helping those accounts get set up. And the most popular brokerage option is Fidelity. They recently migrated to an online process, so it's much more streamlined and faster, and as fast as one business day to open the account. Another top use case would be contributions. Solo 401k plans have the highest contribution limits for any defined contribution plan. Our plan allows flexible contribution options, so the ability to make pre-tax contributions that will reduce your taxable income for the year of the contribution, as well as the ability to make Roth or mega backdoor Roth contributions, which have the benefit of tax-free growth. Our plan is low cost, so that helps the individual just manage their expenses as well as have more funds available to contribute and save, for example. So specifically, we charge $650, which includes the $525 establishment fee, plus the first $125 annual fee. And that's per plan. So even if you got multiple participants, like a husband and wife that are both working in the business, it's still going to be that same fee structure. Totally flat. So that includes all the ongoing compliance support at no additional charge. It doesn't go up if the value of the plan increases. So there's no asset under management fees. As mentioned, one of the top options is Fidelity. Other options are Schwab or banks, credit unions. With the brokerage options like Fidelity and Schwab, those are free accounts. So the brokerage firm doesn't charge anything to set it up. There's no maintenance fee. There's even free online trading. They even provide a free checkbook. And as I mentioned up above, our plan makes the self-employed business eligible to claim $1,500 in solo 401k tax credits, which more than covers our fees for the first 7 years. So it makes it super affordable. Another great feature and great benefit is the ability to invest in what you want. So not only typical brokerage type investments like stocks, bonds, mutual funds, as well as FDIC insured CDs, but also true alternative investments like real estate, crypto, precious metals, private stock, private placement, notes. Ease of use. So we talked about the Fidelity they have an online process. On top of that, Fidelity's built payroll integrations. So Gusto, ADP, Paychecks, many others. And then that allows our customers to be able to set up, for example, automatic recurring contributions through their payroll provider, as well as automatic recurring loan payments. We talked about the ability to take a 401k loan. So that would not only give someone access to emergency funds, but it could be used for any purpose whatsoever. And we handle the loan documents. There's no credit check or approval or underwriting process. So it's a very fast process. So the individual has quick access to their money. There's no loan fees, no prepayment penalties, comprehensive support. So for that flat $125 annual fee, that's going to cover comprehensive solo 401k compliance support at no additional charge. So some common examples would be unlimited free rollovers, mandatory plan updates and amendments. So as the law changes, the plan documents will need to change. Form 5500EZ and Form 1099R preparation, including electronic filing, included as an optional free service with the loan documents we talked about. It's all provided via phone, via email. We're on the phone every day, on email every day, helping our customers, educating them on the rules. For example, how much they can contribute or how to make investments in terms of real estate or crypto. And then as we talked about at the outset, I mean, we go live twice per day, once in the morning at 10 a.m. Pacific, 1 p.m. Eastern, and then we're back. This is our afternoon session where we go live at 1 p.m. Pacific, 4 p.m. Eastern. We have a community of over 30,000 members, online forums. We've got the industry's first AI chatbot, which you can access for free at solo401k.ai to quickly answer questions and find resources. All right, so let's go to the next question. So thank you so much for bringing the great questions. For the $500 tax credit, I'm trying to understand exactly what auto enrollment means. Wonderful. So yes, we were the first provider to offer a plan that makes the self-employed business eligible to claim $1,500 in solo 401k tax credits. We worked with the IRS and other industry stakeholders for almost a year before we rolled it out to our customers. We did it for all new clients, whether someone was upgrading an existing plan or setting up a brand new plan at the end of 2023, which coincided with when the IRS updated the form that's used to claim the credit, Form 8881. So in order to be eligible to set up a plan, or I should say be eligible to claim the credit, the self-employed business needs to set up a solo 401k plan that includes the automatic contribution feature, as well as the notices and other forms, which we do automatically for all new customers going forward. So that begs the question, as you mentioned, right? What is that automatic contribution feature? So that's a great question. So what that does is set a default 3% contribution percentage. However, the solo 401k participant has the right to opt out of that default contribution percentage amount, that default 3% contribution amount. That would allow the solo 401k participant to make contributions in whichever amount or schedule they prefer, obviously subject to the contribution deadlines and limits. But that doesn't mean that the plan doesn't still have the feature, right? Just because the participant exercises their right to opt out doesn't mean that the plan doesn't have the feature, doesn't mean that the plan didn't have the notices, et cetera. So that means that the self-employed business would still be able to claim the credits, $500 per year for 3 consecutive years. Hopefully that sheds light. Great question. All right, well, looks like it might take us to the end of the questions for today. We'll give it a moment to see if there's any more questions. We appreciate the chance to discuss these topics. Again, please like and subscribe. Please don't hesitate to engage on our community, on our YouTube channel. My solo401k.net/my community is the community, and obviously the YouTube channel. You can see, for example, we'll be back tomorrow, and we'll have some good content tomorrow talking about opening up a Roth solo 401k at Fidelity. We'll do a Vanguard solo 401k review. So we'd like to discuss these topics. So we appreciate the chance to do so today. So all the best, everyone. Take care now.